All right, friends, time for another recap. Another interesting little dump day. As always, let's jump on the old X, see what the posts were like. All right, this morning I was interested in this right here. VIX standard deviation is pointing up, still with a deep support. Should be a decent pullback coming in the Qs. Pre-market entering around 17,732. Now, this position I got pushed out on MNQ for a $300 red. So let's go over some of the stuff that happened here. So just to note on the VIX, the standard deviation are these lines that go to the upside here. Standard deviation, this is a custom code. So for us, it's a little different than the standard one, but you're going to see green bars here signaling that it's in an uptrend. Obviously, if they're down, they'd be red and pointed like this. And if you notice on the chart, when we get outside or into the +2 or -2, so if this is our center, this is +2, this is -2, the VIX does not like to be outside of a 5-day deviation range of +2, -2. If you look back in the last couple days traded here, you notice -2, +2, +2, +2, +2, +2, +2, -2 almost, -2 this morning. So with the VIX, I always check pre-market to give a good association of the market's health. Okay, so moving from here, we'll look at this. Here's my stop out of the P&L. We did 3,000 something today. I made 547 times the 6 accounts. It's like 32 something. Yeah, 3282. So we're 3,282 green across all accounts. Here's my $300 red MNQ, green 1,025 on the NQs. Now I got pushed out of that little bit of an early trade. And let's talk about the trade I took instead. Let's move this for now. So this morning, this is where that pop happened, right? Let's go down to the 1 minute. We had a lot of divergence and a lot of kind of scummy indicators, but we still needed a pop to drop because of where the VIX was in support of deviation. That means the upside without catalyst in the market is not going to last. We do not have a Powell, an earnings, a CPI report, anything to really kick off just a melt up day into all-time highs and going crazy on continuation, right? So this is a purely technical play, and these are really nice because technical plays we can get very clean because the data is not driven all crazy up, down, all around by CPI and other releases. Now we have this push, pop to drop, and that was our sentiment. So I got pushed out around here. And this is, I'm a big fan of volume area high, lows, and place. So if you look here on the 1 minute, the volume area has to do with the volume area high, the point of control POC, and the volume area low. For me, the orange is the high, blue is the low, and the red is POC, point of control, which is the highest amount of volume traded in this 1 day, 1 minute chart. Okay. So this is what I was playing off of in pre-market. This is where we got pushed out on, which is fine. I was right here. Now, I like to utilize trades that structure the volume area outside, right? So something where price action is outside of the volume area high. So if I look on today's chart, I can see where price action is underneath the volume area low right here, right? So volume area low outside, we have a good opportunity for a scalp long here as it comes into the 10 SMA, which is this big dash blue line. And this is the daily time frame. This is not anything else. This is coded into our 1 minute chart. So I knew that this was coming into a really big support of the 10 SMA. We are already extended far underneath the volume area low. So this was a good buy point for a scalp. Okay. And that's why I trade the volume area profiles on the 1 and 5 minute. Now, let's back up here a little bit and talk about the trade push out. So I was shorting into here, and at the time, the volume area high was actually right around here. It was right here. So let's make believe this was the volume area high, which is an orange level. And this is what it kind of looked like. So I seen it start roll away right here. I'm like, okay, we're getting pressed above the volume area high. We have a bunch of price action above it. We could come back down and back test these moving averages was my thought process. The 200 in the peach, 666, both SMAs in the purple. And I needed to see a back test of the volume area high and the VWAP itself. So I'm really big on the VWAP, which is the standard purple center. And we use the +2 deviation, -2 deviation outside that VWAP. And as you can see, this sucker is wide. Okay. So that gives us an opportunity to see some exhaustion coming. Now, the VIX was telling us there was going to be a pop to short off that huge standard deviation support of the VIX, and we needed an exhaustion. Well, and we had to wait till open, which is fine. So the volume area high trade here, I was shorting into MNQs, pushed me out, fine, stop out for 3. So I jumped back into NQ, where we made the 3,200 plus today. and I shorted it down to the moving average and VWAP backtest that I wanted. So I waited in the new volume area high, recalculated, and it put it directly on top right here of pre-market high. Now, I'm a big fan of scalps at pre-market high and pre-market lows, just for some first live tag, because obviously pre-market is not live. This is live. So whenever the market opens from pre and pushes into a live huge level like highs or lows, we take a trade. So this pushed out and I top ticked it right here on the short. And then we rode some NQs down to target. So we had volume area high, VWAP +2 as a resistance, pre-market as a resistance. So we had a bunch of catalysts stacking up. We also had a lot of lower highs on the RSI and some really crappy indecision on the MACD, to say the least. Now, with that being said, we still made target. So we shorted off the pop, right? Came down, and I wanted to backtest at the 666 and 200, as we just discussed. They were over in pre-market, so they need to come back down to backtest. We call this confirmational backtesting. So VWAP, purple, you can see right here, squeeze right over in price action, okay? So what am I supposed to do with that? Well, I need it to extend itself and exhaust itself, hitting a premium level and a bunch of reputable resistances to start a pull back down to VWAP. Okay. And of course, we went a little bit lower, but I top tick this. So I shorted from here to only right around here, right to the moving averages, 666 and 200. So this short right here netted 1,025 times 6, deleting that 300 red, giving us 547 for the day. Now, let's talk a little bit about the sentiment of the volume area high and low, because we had a nice dump, and this is all based off the Qs and VIX. So right here with the VIX, remember, the VIX was into massive support here. Then I told the team, hey man, we got some massive deviation support. We really got to be short at the open. Okay. And then we actually went back long during this gap fill right here to 1346. You could stay long till there. And now we have a couple gaps. Well, not a couple, one gap right here left on the VIX, which we should chart out so we know where it is. Just activate it. Boom and boom. So these are very important. My number one strategies, gaps and Fibonacci. So again, big VIX support. And now back into the next couple trades. So I posted on X again, and I said, well, we have an opportunity to move up to another place. Let's talk about the VWAP anchors. We got the P&L there. Then I said another one. Well, we have an anchor VWAP. If you don't know what anchor VWAP is, you pick a start point and it creates a volume weighted average price from the start point. And I use the deviations outside of here to day trade scalp. And this is what the trade plan was here. We had a top high of day on the 1 minute chart. This is on Qs, and it gave me 3 deviations out. So this is the center of the VWAP, 1, 2, 3. Same thing, minus 2, 3. This is 1. So the deviations outside of the VWAP become support resistance targets. Now, we had a shy right here, and a lot of the times price action on Qs, not ES, will shy, or the SPY. And when we don't get a tag of the absolute VWAP, I usually look for a running back test of that anchor VWAP. And it usually comes in on the 1 minute chart pretty close to the regular VWAP, but we like to use the anchors. So the last trade of the long here was to come back, like we said on X, and that was right here. And we damn near nailed it perfectly. I told the whole team to, during the consolidation of the first dump, I said, we're getting divergence, right? We're getting higher lows on the RSI, higher lows on the MAC, huge buy waves on the histogram on the MAC, and upside potential burst on the RSI. What does that mean? Buy all dips. Every time you see, especially a break in sequence, a fresh low, the algos love fresh low stop outs where it'll jump up, hit divergence, fresh low, and then it'll start higher lowing and higher highing on trend because we had a nice little dump at the morning and our indicators were saying so. Now, with this being said, we dip bought all of these guys here, and we looked for the VWAP anchor backtest tag. Unfortunately, we hit the 100 EMA here, and then we got super close to that VWAP here. So this is a target hit, in my opinion, because we are within range. What I like to do is I get in early and get out early. So if I was pushing out here, I would be buying in these dips here, buying in these dips here. And once we started popping up close, I'm selling here, I'm selling here, I'm selling here. I'm playing the trend. I'm buying the dip buys and I'm taking profit on the way back up. And when I get close to a level, I don't want to get shied out of my position, right? So like we had just discussed on the anchor of the trading view, we have this guy shying that center purple. Let's see if you zoom in here. Center purple VWAP. I mean, our target was within like 6 cents right there, right? So I'm dip buying all this stuff and we get to push and we finally get 3, 5, 6, 7 points on ES. I think it was almost 38 that we called on Qs here to the long side in between here. That's huge, you know? So with that being said, that's another one. So you need to be using volume area high, low, and profiles on every time frame. If you can't find anything on the intraday scalp, you move to the higher time frames. And this is what trading multiple contracts, and this is what the versatility is. I trade NQ, MNQ, ES every single day, just across the board. We trade both of them. It is always imperative to your risk management to utilize all the contracts. Don't just stick to one single little MES. You have to utilize the market and who has the better trade. I trade ES and NQ day in, day out. Those two tickers, no matter what, right? And what they do is they have trade setups apart from each other. Let's try to get in here one. Whoop. These trade setups, some are good and some aren't as good on SPY versus Qs. So I have ES, on Tradeovate through our PA accounts, we load NQ and ES ready for either or trade. You have to be able to at the versatility. So in this scenario, here's the volume area low on the minute chart. We are extended past in this price action right here underneath the volume area lows. Notice we never got the extension. One of my favorite day trade scalps, as explained on Twitter and X, is when we get outside of the volume area lows or highs. We stretch out, we create candles, full candles outside. So this would not have been the key long for me because there's not a extension outside of multiple candles on SPY. But on Qs, there definitely is. We have 1, 2, 3, 4, 5, 6 candles developed under. So this is a further extension down past the volume area low. So this is more oversold than the SPY is. So I would jump into an NQ long here rather than an ES. That's why you need to be able to jump between MNQ, NQ, ES, MES, because some of the trade setups between Qs and SPY are very different. And some of the high-paced movements here, they have divergence of each other. They don't move 1 to 1. They don't move 10 cents to 10 cents. They all have capability for scalp trades a little differently. Now, some of the, MAC and stuff, it's going to line up pretty close. You got the big higher lows, the big divergence that we had played there on the long, so on and so forth. It's all perfectly fine. But note, you need to utilize multiple contracts. You need to be able to bounce around. You got to be versatile. That helps your trade management because it allows you to be able to take the trade. If I just sat here and traded ES the whole day and sat here and I didn't get an extension here, I probably would have missed that long because I generally look for candles that are developed fully under the volume area low for this dip buy. I want a candle that opens underneath and closes underneath like this under that candle. I call this a hard open close. There is no tag of anything. So if a candle is developed right here, it has the volume area low chopped right through the center, right? But here, that candle is completely independent of all indicators and it's all by itself, right? So again, looking back at the Qs, this was a much better trade and I would have axed out the ES. I would have not have traded the ES and I would have bounced in between like I always do because the risk management is much better on the obvious extension that you can play between the two because each are going to have different risk management at the same time, which is crazy. So as the markets pull back, sometimes you see really big divergence between Qs and SPY, but a lot of the time you're going to have frequent near term, right? They're going to be kind of the same pattern. And you can see right here on this low, the extension was on the Qs. So this was the better trade. So I would have picked NQ over the ES for the long. So I hope those explanations help out. Nice little $3,200 date. Now for the rest of the time, we see here, I would go to the Q's all-time high daily candle for fibs. So what I would do is I would fib out, which I already did here for you guys, the all-time high candle's body, and then I would look for continuation from the golden pocket. That's the next move. So whatever happens to be earnings, Powell, Fed speaks this week, whatever the catalyst is that drags us one way or the other, we're looking for a confirmation above or below this beautiful golden pocket. So with that all-time high, you can notice on the intraday chart, if you go to the 5-day 5-minute, see the structure here. These are still creating higher lows on the daily chart. Here's that big low. Here's the first higher low. Today's the second higher low. Do we break structure and then confirm at the golden pocket to the short side? Or do we break up here, have another trade day where 427.80s becomes support, and we find ourselves to the trend direction to the top side, which we would then target the 1618 above the 100 fib. So if this thing goes above the 100 fib here, above 428.99, we have a chance to make it to 432.23. New highs on Qs. If not, we're looking for breakdown and continuation under. So if this higher low breaks today, we got a lot of time left today. So if we end up losing this low and creating a lower low and we close down here for whatever reason, so be it. I'm still short biased and have my swings on. We got like 80 some days left on my contracts or swings to the downside. So the bigger swings are still here. We're still scalping and day trading tons of contracts in and out because that's the stuff we love. So tune in for the next one. We'll see you then.